Afternoon. This is the Popper Scan video for Buy Sell Short for Monday, May 23rd. We're actually going to start off with a little chat on the indices before I get into the Pop Scan. Ugly day today on Wall Street. Almost a repeat of what we saw, almost to a T of what we saw last year. I mean, aside from the fact we didn't have a flash crash this year, all the stories exactly the same as last year. European debt crisis. Here we are a year later, and they're still using that as an excuse to hammer the market. There really is no good news out there right now. More and more traders are turning to the bearish side, ourselves included. So there's just not a lot of positive info out there. Earnings have gone past us, and, it doesn't take much to stampede traders in one direction. And right now, that direction is down. As you can see on the daily chart, they were able to close us below the 50-day moving average. So what's going to happen tomorrow? Are we going to see a repeat of what we saw in mid-April when we had that close below the 50-day moving average and the move below the 50-day moving average and then a nice bounce over the next few days? Or are we going to see a continuation of the market action we saw in March and look to seeing further downside risk, probably to the 12K or under area? Right now, I'm leaning towards the March scenario, as I have been for the last week or so, and the reason we are high cash. And let me tell you, doesn't it feel friggin' great to be high cash in this really crappy market? I know I've been sort of not in the chat room a whole lot over the last couple of days, and that's for a reason. I just don't want to be tempted to trade anything. Trading is very addictive. I do not trust this market, so I'm trying to stay away for all intents and purposes till the odds favor us. That could be tomorrow. It could be a week from now. But, looking at the market, not liking what I'm seeing out there. If we look down at stochastics, we've had another dip down on stochastics. So that March scenario is looking, really possible right now. Unless we had a big update tomorrow. If we were up 100 points, plus tomorrow, I'd probably reverse my stance and start going shopping for some plays, but I would still remain high cash, maybe going to 90% cash, but only playing half positions, at least for now. Looking at the Dow 15-minute chart, we had that golden cross that was unable to happen on Friday, and then straight down. We had a little bounce into the close, short covering, not really a surprise given the extent of the sell-off over the last couple of days, but we've got a downtrend line on RSI. Stochastics are pointing down. We've got MACD on a downward trend, so we could see another gap down on the market tomorrow, again, depending on what happens overseas. Russell 2K, ugly. 2% drop on the Russell today. And, small caps are what we play, which is why we are sitting on our hands right now and not forcing trades. I try to hammer into especially new guys who've, only been trading for a year or two that haven't been through the really bad markets. Sometimes the best trade is no trade. Believe me, after doing this for years and years and years, I have no problem sitting out the market for a few days, waiting for the trades to, the risk reward to turn in my favor versus trading for the sake of trading. We've got a possible breakdown in the Russell 2K, and we could see another 2 to 5% drop on the Russell. Remember the chart I showed you guys yesterday, the 1-year chart. SMH gap down here as well. We're right at the 50-day moving average. We broke below the bearish rising wedge now, so let's see what happens. If we lose the 50-day moving average at 35, we could be looking at some serious downside here on the SMH near term. Of course, the whole reason, obviously European debt crisis, but we've got the US dollar, of course, on a move. Euro bad, dollar up. But, the dollar being up is not good for us. Despite all the stupidity you hear on such news shows as, faux news, etc., about the death of the dollar and how, things are being ruined, we want a low dollar until the economy is booming. The economy is not booming. We are sputtering along, and the politicians are doing everything they can, in my opinion, to chop, the two legs that this market is standing on out from underneath it when we need four just to be moving along. So dollar, sad to say, we could be looking at a move back to that 200-day moving average up there at 78. And, a positive dollar, bad for the market. And, it's no coincidence, when you look at all the things that are happening right now, they pulled this debt crisis out of their asses again. Of course, there's going to be a debt issue when you've got the three blind mice of Fitch, Moody's, and Standard & Poor's downgrading the debt of these countries. When they downgrade the debt, the price for them to borrow goes up, and their ability to repay it goes down. It's a self-fulfilling prophecy, just like it was last year. But, I read an article today, global corporate bond debt, there's no real sell-off on that. So what we're seeing right now is probably just, a little stupidity in the near term, which is great. We're a little bit overbought in the market. Is it time to, totally throw in the towel, call for a new bear market? No, not in my opinion. This is just a normal correction that we needed in this market. And the fact that we're high cash, you know what I say? Let them burn the market. The cheaper they get stocks, the bigger the bounces are going to be when we start finally moving in and buying plays. Anyway, enough of the market. Let's jump into some stock plays. LVLT, this is actually, other than MCZ, the only play I'm holding right now. And the chart setup, fantastic. The market has been down big over the last couple of days, and LVLT has been a champ. If this had been an up market like we saw a week ago, we would be looking at LVLT trading at 220 plus, in my opinion. Very, very strong action. If we have any sort of bounce up green in the market tomorrow, off to the races we go. 210, 220, 245 are the targets on this one. My stops, I'm going to let it be for now, just because it's all I hold, and I love the setup on it. HAFC is on the pop scan tonight. We've played this one a couple of times. Chart looks good. Looks possibly bottomed, but this stock, we've tried it a few times, hasn't worked. Will it work? All these frustrating plays, eventually they go on big runs. Possible buy triggers would be a break over the 20-day exponential, 124, positive MACD cross, possibly in the next 2 days. Stochastics also sort of, tempting a move, sort of similar to what we saw back here. So one to definitely keep an eye on. VLNC, another green day today. Now notice, this is something I've been saying over and over the last couple of weeks. Really, the big movers on the pop scan are stocks up multiple days. Traders, for some reason, only want to buy stocks that continue to move up every single day. And, if it's up 25% in a day or more, sweet, they're going to chase it. Nice move on this one today. Next breakout would be $1.34, and you could see another 10% upside on this one. ASTI, this is a solar stock that's gotten beaten over the head over the last few weeks. Nice bottoming action on this one here. Breakout 135. If you wanted to be a little bit safer, 140. Target 151, 160 on this one. If I entered a $1.40, I would place my stops at $1.34. RSI is trying to peak up. And actually, if you look back over the last month, there's more buying than selling in this stock, but the stock has gone down. So something just to ponder. On-balance volume pretty much shows that same thing. Even though the stock has sold off 20%, 25% over the last month, they've been buying this drop-off. So definitely one to stick on your watch list. CTICD, miraculously, this stock didn't sell off today, even with the market. On the pop scan now, so we could get our day 3 short opportunity, because that's the only way I am playing this bloated turd of $400 million market cap on an FDA meeting. We're not even talking approval. We're just talking the FDA saying they can continue. So jam this one, please, guys, so that we can short this baby up here in the 3s in the near term. SNSS, biotechs, a couple of them on the pop scan. SNSS can be a frustrating play. Where would I possibly look to buy this one? Maybe on a break of 290 with really tight stops, or a break of 3 is what I would be looking at. BPAX, look at this one. I mean, this stock, no matter what the hell we did on a 2-hour break, would not run. And here we are, a month later, up 50%. Big time breakout on this one today. Like OPXT, which I'll talk about tomorrow. I would not be surprised to see this one trading up in the threes tomorrow, just given how some of these big movers have been doing lately, especially on volume. So definitely one that could be a scalper play tomorrow. OPXT, this is what I've been saying over the last couple of weeks that we've been seeing happen all the time. Stocks up big, continue to move big, and if you played this one today, almost to $3 already. Next target on a break of 3, you'd be looking at a gap fill up to 330. And again, would not surprise me to see this stock up tomorrow. Last but not least, we've got SHZ, one of those rare earth plays, holding its 200-day moving average. Its peers aren't doing very well, so if its peers started bouncing tomorrow, then I would definitely look to this one for a bounce back to its 20-day exponential at 440. So that's it for the pop scan. Again, guys, be very, very careful. If you're a rookie trader or unsure in this market, it's okay to do nothing right now. Your trading capital is your most important asset. If you're going around chasing stocks just to chase stocks, you're going to get burned. The market will turn. Crappy times don't last forever. We're just going to bide our time and jump in when the time is right. So let's see what happens tomorrow, whether we get that bounce back or more of the same, whether we're going to continue to work on our tens. So that's it for the pop scan. See you guys in the chat room tomorrow. Goodbye.